Testing. Okay, seems like the sound is alright, but the screen is a bit lagging. I believe that there is some problem with the connections, but let's see. Some problem with. Okay, I think everything is okay. But we shall wait for a bit for the others to get in before we start. Maybe we just wait for a few minutes. 3 to 5 minutes will be good enough, I think. Seems like everything is dropping all right. Like Costco, Apples, and everything. Seems good though. You can see that Costco is have a switch of structure here, which means the lower time frame has switched from bull structures to bear structure, and later on he just retest this level for 2 times or even 3 times if you count this in, and then it's just dropping very nicely. But right now, if you just check from the Costco itself, from low time frame is a very strong bearish movement. Meanwhile, in the larger time frame, like 1 hour, like one day, actually it is still in a very healthy uptrend though. As long as it didn't break this low, it's still a higher low when comparing to this one. So there's still potential that it will just reverse and going up. So for those who are still holding Costco, the best case scenario will be it just break this the previous low without any rejections, and then it just close below. And if that is the case, then lower time frame bear structures will now transfer the bear strength into a higher time frame. So the strength will just continuously pushing it down, and then it will become a very big bear movement. So actually we can just check on this level. But even though if it hold on this level, it's still a bear structure though, but you can consider to take some partial profit if you have multiple positions, or you can just quick and then maybe wait for a retracement for you to get in another time. Why I'm saying so? Because once it touched this previous low, it's now considered a same bottom but not a higher low. So when a higher low is not there, which means it's not a healthy uptrend. So once it touched this level, no matter if there's a rejection or not, you may consider to just you may consider that the uptrend is over. So it's just a matter that if you want to take profit here or not. And my suggestions will be you can monitor a bit on the candle reactions when it hit this level. Let's check on Apple. Why are we checking this? It's because this is all the stock that we have been called in the daily suggestions. Let's say dropping nice and beautifully without any rejections. Here you can see previously when we're doing an analysis, we enter it right away here. And now it's just going down and down and down. And then this is what we call is breaking without any rejection. There's no green candle forming here, which means that there's no rejections. And the previous day closed below the previous low. What does it mean? It means that the bear movement will just continue to push down. So whoever that get into the short position here can hold for longer target. Maybe another previous low around here. So this is actually a very beautiful profit if you just follow our call. And this is actually up to date until yesterday. I didn't update for the yesterday result. Else it will become 500 something or 400 something for Apple's, Costco, BSC and all those. And even something like TMUS already dropped. Let's check on the chart. Beautifully. See? When we are calling this is around here, which it tests this previous high without any strong breakout. And it make a fake break here and then have a retest and it continues to push down. So everything seems nice, and if you're having a short position at this level, you can just continue to hold. So let's start on today's topic. And today's topic actually, I don't want to go to the theory part. So for the PPT itself, maybe we can just leave it. So let's go through it in a very simple way, which what is call and what is put. So actually, when we are talking about call and put, it's very simple, which mean when the share price is going up, price, how will they respond to it? Okay, let's say. So actually a call and put option is just a leverage tool for you to get in and then you can enjoy a higher fluctuations when comparing to a traditional trading in stock. So what we call is if you are just doing let's say you are just having a short position here and right now maybe you are just making some really nice 5.6% profit, but if you do hold the options, in this case, it will be put options because put options is for bearish. And then when you are aiming for a bearish movement, you go for a put options. And then this is what happened. If you buy a put option, then what you make is not just a purely 5.6%. While you may be able to make like 2x to your account or 3x to your account. So option is actually just a leverage tool for you to just double your account or even grow your wealth a little bit faster. So you just have to understand the can we adjust the size a bit? I do not think so. Never mind. You just have to understand the core relationship in between. So whenever the share price goes up, the core price will go up, but the put price will go down. So when the share price drop, the call price will go down and the put price will go up. As simple as that. So that is a leverage tool. It's just that call is having a positive call relationship to the share price. Meanwhile, a put is having a negative call relationship to the share price. Okay, so this is what you do. When you are doing this, make sure that when you want to aiming for, so what you do is if you are targeting for the share price to go up, if you are targeting for the share price to go up, what you buy? You buy call. But if you are targeting for the share price to go down, like in this case, when we are expecting the share price to reject it on this level and go down, what we are going to buy is puts because we want to make money. Okay, so when this is just very simple logic and you don't need to understand whatever things about the executions on the expirations or whatsoever. But the things that you would have to be careful is that you make sure that you have to choose the expiration date that is longer enough to make this move happen. So when I'm having this put, if I'm just picking for a 1 week put, then I might not be able to survive these rejections. So the expiration date is whether the time duration for my position to survive. So actually, I would recommend you to just do it for 6 months or even 1 year because these two will have a higher tolerance uh, to the time and whatever that you gain from the movement itself can be a lot bigger when comparing to the depreciations in the time value. So, if you already understand about the relationship of call and put, now this is what we do. First of all, I will just explain my thought process when we come to picking up a stock and the options. First of all, what we have to do is we have to analyze the macroeconomic. Why I'm saying so? Actually, you can just review from the previous performance itself. When you can check from the previous performance, all these call options, you can see there's a C letter at the last, and you can see that all these call options actually performs very badly when you're comparing to the put options. Meanwhile, the put options is actually performing very well. And this is why, because the call options against the macroeconomic. When the whole market is dropping, how can the specific stock or the individual stock become an outlier and outperform the market? What is the probability that for the individual stock to go against the market in a very strong strength? I would say the probability for it to happen is unlikely to happen. So if we are going to trade, make sure that we follow the macroeconomic trend. And what you can do is actually you can do a technical analysis on either SPY, Nasdaq 100, or even QQQ, because these actually represent how the whole market is performing. So actually, when we are doing a macroeconomic analysis, in a simple word, in a human language, which means you have to do the TA, the technical analysis, on the index first, on the market index first, just like SPY, QQQ, and even the Nasdaq 100. After that, you will make sure that you align your bias, your direction bias, together with what the market show you. So if you can, as you can see from the market itself, it is dropping without any second thought. So at the second that it breaks through this level, it already switched from a bull to a bear. So on this day onward, which is February 27, everyone in the world should go for put options, but not a call options. So if you do a put options from that day onward, believe me, you will make a lot of profit from it. And actually, there's a little bit sign here. If you just pay attention to a smaller time frame. So from a smaller time frame itself, it tells you even high earlier when you're comparing to a higher time frame. So on this day, just 2 days in advance, so you can know that the direction bias is high likely already changed. Or even you can check on QQQ. When you check on QQQ, this is the level that for it to happen, which is falling on February 24. So on this day onwards, the market already switched from a bull to a bear. And you should be looking for a put options instead of a call options. So this is first the macroeconomic macroeconomic view. Make sure that your direction bias is the same with whatever the market show you. And if you're just doing the same directions together along with what it show you, there will be a high likely that it will be in profit. At least it increased the probability for you to win the game. So we have to stand on the same bias, the direction that is favored by most of the player. So let's go back to where we left out. First thing is macroeconomic, and it decides what does it decide? Your direction bias. Second thing is what we call a short-term catalyst. Why? Because if you are trading for options that are going to expire, let's say uh, within 2 months or even within a quarter or even half a year, then actually you want the price to react to the to you want the price to react to the direction very quickly. So what we need is a short-term catalyst. And actually you have there's some very good example here which you can see from the T-Mobile. When there's the earning release here on January 29, you can see that it jumped directly and then have a very strong push. This is what we call a short-term catalyst. So if you do a long trade way before the earning release, then you're already in this profit. And let's see from another aspect, which is another stock that I have done based on the short-term catalyst. Actually, I do the Costco put purely based on the short-term catalyst. Why? It's because I when I'm doing an analysis here, first of all, the whole market is already dropping, but not the consumer industry. So I'm targeting on the consumer industry. And then I realized that Costco is going to release the earning reports right away, March on March 6th. So this is what I do. I check on the valuations and I found that actually Costco price already achieved the valuations that the market given and then maybe a little bit surplus from it. So I believe that if the earning report doesn't show anything better comparing to what they forecast, then this is unlikely to continue to push up. And what is the probability that the earning report is showing bad? Actually, you can tell from the market performance because uh, this is actually the last year result, right? So you can on every day you can just observe your surrounding. So if they are really buying the grocers or if they're really buying things very heavily, then you can just believe that the consumer will going up and up. But from what I observe is I don't see anything that will stimulate the industry, which there's no quarantines, there's no COVID, and there's no stimulus to the sentiments of people that is going to buy grocer. So I don't believe that this earning will bring anything better when comparing to the forecast. So even if it just hit the forecast or if even a little bit higher than the forecast, it doesn't mean a very good news. It's just a moderate news. And what if the earnings show bad? Then this is what happened. If the earnings show bad, or if they have a negative forecast, or what is going to happen in this year, this is what it will bring to a really huge drop. So this is how you make use of the earning. We are not gambling on that, but we are analyzing the possibility that the result will be better than the forecast, or it's just a moderate result, or it will be bad. So we analyze the conditions and then we will have our direction bias due to the macroeconomic view. And then we will choose the one that is going to have the earning report recently, maybe 1 month or 2 months. But try your best to find those high value company and also those price that already surpass the valuations, and that will become the very strong solid reason for it to drop if the earning doesn't meet what the market is expecting. Okay, so the first thing is the macroeconomic, which will decide the direction bias, and then the second thing is the short-term catalyst, and usually it will be the earning reports. But somehow, when there's something else like the some kind of the medicine get approval, or maybe when iPhone get the new product launch, actually it is also a very good short-term catalyst to the market too. So whenever that the iPhone, the Apples have a new product, it usually will push the share price a little bit higher in the future. So this is what we need, a short-term catalyst, just for our P&L to just uh, get to realize as soon as possible. And then afterward, we have to go to TA, which is technical analysis. Because even though you have the direction correct, but if you get into a very wrong positions, very wrong uh, level, it might lead you to a very suffering period. Like some people are very bullish now, and they might not be wrong. The market might still going up a little bit in the future, but they enter the market in a very wrong timing. Which example, buying Tesla at 400 something or even 380 something, 430 something, that will be a very wrong decision to do. Even though they are bullish to the market in the long run, but the technical analysis will definitely help you to time the market and having a better entry. So basically, what when I'm doing a analysis on share and also a analysis on options, this is what I do. First of all, I identify the market directions, And then I find those stocks that is going to have a short-term catalyst in 1 month or even 2 months. And then I will do a technical analysis for it and then put an alert for me to get into the positions at a very nice entry. And when I found the entry, I'm able to get into the positions. Let's say, BSC then. Let's say BSD, when I'm doing an analysis here, I have find that from low time frame itself, there's already a switch of structure. So I'm actually target to enter the market with a short. And this is the first position that I get in. And what happened is that when it come back to retest this level and having a next day close with a hammer-like candle, I add on my positions here. And this is what we call a timing. And from the option chart itself, you can see that actually this is quite a good entry. Let's say BAC. March 28 with a strike price of 45. As you can see, I actually entered the market with my first bet on this candle, which is falling on February 21. And I add on another positions on March 3. And this is what you can see. From February 21, actually, I get in my first position here on the day open, which is this level, $1 and something. And then on March 3rd, which is here, I add on my positions. So I actually have my another position also $1 something. And right now, both of these positions already give me a 5 or 4x return. You know, use 100 and make 500. What a wonderful world. So this is actually how you time the market. So if you just buy in two something or even buy in 2 days ago at $5 something, even though the market is still dropping, but it doesn't seem to bring you a lot of profit. So actually you need to have a better entry with just technical analysis to time the market and the entry. So actually these three is all we do to find a stock and a position to entry. Right now what we are doing is actually we have to take care on the options. When you are picking up an options, how are you going to do so? You can see that on this on let's go back to BSC then. Actually, you can see that on this day, February 21, I'm picking up the option that is going to expire on March 28, which is around 1 month and more. Believe me, this is actually not my usual behavior, which I actually prefer that the one that is going to expire on half a year or even after 1 year, because the longer expiration date options will provide me a better room for the share price to breathe, and I'm able to catch a longer trend. which is what I usually like to do. Even though it will be a little bit expensive when comparing to the cheaper one, but you are able to catch the whole trend instead of just a short one. So this is where you can just flip your account to 10x or even 20x. So right now what you do is actually you have to, uh, for example, if I'm going to buy options for BSC right now, let's say I'm assuming this is already the solid bottom and it's going to rebound soon. What I'm doing is actually I'm going to find the one that is going to expire, like maybe this one, 35 or even the 43, which is also not bad. But what you have to do is, if I believe this is the solid bottom, if I believe this is a solid bottom, then I'm targeting it for it to rebound, right? So I'm actually want to do a long position. When I'm trying to do a long position, I just have to pay attention on the call options because we already talked about the correlation things and those. So if you are not very familiar with those, you can just check back on the recording later on. So let's see what is the price falling on now. Maybe 39 something, I believe. Yeah, 39 and 91. So if I want to just target it for this one to go up, actually I will buy for the option that's going to expire for like 1 month or even 2 months, which is also good. But what you have to look is the volume itself. You have to make sure that the trading volume is sufficient for you to get in and get out without any problem. Because if you are going to pick those options that with a very little liquidity, you might face a scenario where you get into the position already, but you are unable to get out. So you trap into the condition where you you open your account every day and you see the profit, but you're unable to withdraw any of it because you're unable to quit the positions. And that is very pathetic to look at. So when I'm doing the trade, I make sure that the options that I trade is having a very high liquidity in the trading volume. So you can just check on the volume column. Make sure that it have a very high volume. Usually, above 50 is quite a good number to trade with. And the next thing is the strike price. What strike price are you going to choose? Normally, I won't suggest you to pick any in the market options because first of all, they are expensive. And second, the return is also not that good. And you can see from, yes, the leverage and the effective gearing. What we mean by effective gearing is actually the drop percentage multiplier. So if you can see the effective gearing for this one in the market options, this is expensive. You buy one options, you have to pay for 535. But if you're picking up the 44 one, you only have to pay $40, which is a lot cheaper when comparing to that one. And the leverage effect is also a lot higher when comparing to those in the market one. So you can see that the leverage for this one is 102. Meanwhile, this one, for the 35 one, the leverage is only 7.3x. So this is actually very bad to trade with. So usually what I'm doing is I will either choose the 42 or the 44. It's all to me in my risk preference. Let's say I'm picking up this 44 and I can see that actually the effective gearing is 18.88. What does it mean? It means that if the price, if I buy it today and in the future days, it goes up like maybe 8%, how much my position will go up to? And you can see I buy in negative 40 something, right? with a refractive gearing, which I don't remember, 18.88. So if the share price it goes up like 8% to 43, even though it haven't reached my strike price yet, but I'm able to profit from the price movement itself because the call option is actually having a positive call relationship to the share price. So how much this one will go up? This one will go up for 8% times, let's make it even first. So 8% times 18.88. This is the percentage that it will go up to. You to add 1 just for the mathematics. And this is the percentage that it go up to. So times 0.4, which means if the share price from today, it rise from 39.91 to 43.12, which is an 8% rise, my call option will go up from 40 cents to $1. Now you can understand. So when I buy this, one option is equal to 100 share. I need to pay for $40. And later on when I sell, I can sell at $100. So when you compare it to this one itself I actually make like 2.5x when I comparing to a normal stock buying, which I already only earn for 8%. That is what the option give you, the leverage effect. So as simple as this. And so on for, and still the same for the puts. If you want to understand more, maybe you can try a little bit on the calculations, or even you can check for the group that we have. So that is for today's sections on how to choose the stock and also the options and how to do a calculations for the profit and even the set the TP, the target price for your exit positions. And if you have any other questions, feel free to contact your manager and you can just find your manager contact in the app. And then under that, you have a me tab there. Click the me tab and then you will find your manager contact somewhere in there. And if you have any question, you are feel free to just contact me in also can. At the end of the session, let me show you a little bit on our results. But this is actually not an actual result, which this is the result if you just buy and leave it. But actually we can do a lot of trade management here. We can limit the losses and maximize the profit. And we can even add other positions if there's any retracement. And this is the Telegram contact of my personal contact. Feel free to add me, or even if you want to add me with WeChat, also no problem. If you have any financial question, feel free to ask me. And this is for our Telegram group. And then if you have any trading questions, any analysis question, feel free to ask in the group and then we will answer you right away. And if there's no more question from any one of you, then this is all for today. Thank you.